month, and the report that the Army wants to outfit combat divisions with more than 1,000 drones. And can you discuss that in the context of how the Army has already ordered thousands of Switchblades from AeroVironment and thousands of Pumas in the past? And so do you view this Army transformation initiative as incremental to what you've already provided for them? Thanks.
Thank you, Louis. Yes, first of all, we're very, very pleased with the results that we delivered on the fourth quarter, setting another record for the quarter as well as for the year. Not only in our overall business, but as you mentioned, on the loitering munition. I mean, that business is growing rapidly. And on fourth quarter, we grew over 83%, as you saw. And another key figure that's really important is that throughout fiscal year 2025, not only do we book a record $1.2 billion worth of new orders, funded bookings, but the LMS business or segment alone booked close to $477 million in contract awards. And it's a variety of mix of customers, some for the U.S. Army, some part of the Replicator initiative of the U.S. Pentagon, international customers, about 8 of them so far. And all of that means that we have tremendous momentum with our LMS business going forward. We expect that business to continue to grow. Specific to your question related to the U.S. Army's robotics or transformation, General George has made a very clear statement, and so has the Secretary of the Army, that they would like to shift and modernize the U.S. Army, and there is significant potential upside in the key areas that they would like to modernize and transform the U.S. Army. One of them is related to loitering munitions, drones, counter UAS and counter drones, directed energy, and RF jamming capabilities such as our Titan solution set from Blue Halo. So if you look at the priorities of the U.S. DoD and its U.S. Army, AV is positioned incredibly well. Not only do we represent more than 2/3 or 3/4 of the U.S. DoD's priorities and the Army's priorities, we also are very unique because we have the capabilities that we can deliver today. We have the production capacity to deliver to make them and produce them at scale, which we've done in the past, and our systems are battle tested and proven. So the short answer is yes, we expect additional incremental opportunities. Details of that is not well known yet, but I think the momentum is very much on our back, and I think the loitering munition business is going to continue to grow.
That also includes counter UAS in the Army transformation too.
That's right.
Great, that makes sense. And another question, you guys discussed the very strong foreign military sales pipeline and how I think you are shipping the Switchblade to 8 countries, and you are involved in negotiations with another 8. And some investors are wondering, was there a write-down in the unfunded backlog, and was that write-down related to foreign military sales and the different policies under the new administration?
No, Louis, the answer is no. We did not have any write-downs related to our LMS business or FMS sales and on our financials this quarter at all. The LMS business is doing great. We have a lot of momentum behind it. We continue to work with more and more countries and allies who want to get Switchblades into their hands of their warfighters. And I believe the opportunity is just beginning, and that trend is going to continue over several years in the future. We're positioned very, very well, but no write-downs related to LMS business in the fourth quarter.
Well, the unfunded backlog converts to funded backlog during the period. So
that's right.
Okay. Yeah, investors were just wondering on a sequential basis, the total backlog adding funded and unfunded went down significantly. And so was there any write-downs in terms of, or was just everything just unfunded converted to funded, and then there was the revenue burn associated with the backlog?
No, I mean, like I said, it really just was a conversion of the unfunded to funded orders during the period. and revenue.
And if you know, Louis, if you recall, earlier this last fiscal year, we had nearly a $1 billion sole source IDIQ for the U.S. Army that I mentioned in my remarks. And as the U.S. Army places orders, firm funded orders against that, it converts from unfunded to funded backlog. And so that dynamic has been occurring for the last few years. And we explained specifically that multi-year IDIQ award from the U.S. Army for nearly $1 billion is specifically intended to achieve that, because they would like to make sure that we easily can put things on contract and convert them into funded backlog. And we're going to continue to see more orders in the future for our loitering munitions in fiscal year 2026.
Okay, great. And one last one, if I may. Is there still a significant market opportunity for the P550? And can you just discuss the broad market opportunity for both the P550 and the Red Dragon, which I don't think have generated any revenue for you yet, but they seem to have significant potential for fiscal 26.
Yes. So first about the P550, as I mentioned in the remarks, we introduced 3 groundbreaking products, 2 of which you just mentioned, and the third one is the Jump 20X Group 3 UAS. On P550, we expect that product to do extremely well. We're positioned really well. The U.S. Army has announced multiple programs, at least 2, one of which we're expected to be down selected and receive an order for essentially the next 2 quarters. And that's our LRR program of record, potentially, which is worth about $1 billion by itself. Besides that, the international demand for P550 has been tremendous so far. There's a lot of need. There's a lot of interest in it. And we expect to book our first initial order, most likely from an international customer, this first quarter or the next quarter after that. So we expect the P550 to do very well. It is a very large market there. There's a growing demand. And let me just remind everyone again that the P550 is an incredibly capable solution. It is incredibly disruptive. The economics of it, the multi-payload and multi-mission aspect of its features is uniquely positions it to be a very competitive offering. So we feel very good about the P550. In regards to the Red Dragon, we actually do have some revenue. It's part of our McCready work so far, but in the future, it will be reflected as part of our segment 1 that I described under the precision munitions and fires. So we do have initial revenue, but that product is expected to do really well long term. It's just at the earliest stages. It is a capability that is highly differentiated, and there is a lot of interest in that capability, and not only domestically but also internationally. So we feel actually really strongly, really well, as I mentioned in my remarks, in all of our 3 new products that we launched. We believe that in the next 2 to 3 years, these products will generate hundreds and hundreds of millions of dollars, if not $1 billion plus worth of backlog for our company to execute against going forward.
That's excellent. Thanks, Wahid. Thanks, Kevin. And
thank you, Louis.
Thanks, Louis.
Thank you. Our next question comes from Greg Conrad with Jefferies. You may proceed.
Good evening.
Hi, Greg.
Maybe just to start with a clarification on the revenue guidance. If I look at the bottom end of autonomous and space, it adds to the 1.9. But if you look at the upper end, autonomous at 1.4, space cyber at 0.8, it adds to $2.2 billion. Is that conservative? Is there any type of intercompany elimination? Just kind of what drives that lower end lower than the 2 segments?
I mean, these are obviously ranges of potential outcomes. I mean, we don't operate with large programs of record, so, if things go the right way, they'll be at the higher end of the ranges. And if, just in business in general, some areas go better than others and others overperform and underperform. So there's obviously opportunity to hit them both at the higher end of the range. But in terms of the total, we've taken some, judgment on the totals.
And then, it's been a little bit less than 2 months of ownership with Blue Halo. I mean, I think the guidance excludes some of the, potential expenses and amortization. Did you include anything in the way of either revenue synergies or cost synergies in terms of the 26 outlook?
We as we put in the S4, we had some cost synergies projected. We'll be able to achieve those, but obviously you don't get the full benefit of those until for the full year. And as I said in my remarks, we'll begin to realize that throughout the year and kind of hit our original, $10+ million target for the first year. We in some ways we have some revenue synergies, but it's going to take some time for those to fully play out before we can put those into our forecasts and guidance and things like that. So we're still early days here, but there's lots of opportunity, lots of excitement about the things we can do together. But we haven't had a chance really to start monetizing that in our forecast.
And then maybe just last one for me. In terms of the 70% visibility coming into the year, I think you mentioned that's, above where you typically guide. Can you maybe talk about the drivers of that? Does Blue Halo, have higher visibility? Did you take a more conservative, route in terms of guidance? What kind of drives that higher visibility into 26 at 70%?
Well, the visibility is similar between the two segments. There is, when you look at the space, cyber, and directed energy segment, particularly on the cyber side, they operate off of longer-term contracts with task orders. So there's somewhat more visibility on those. It's not reselling every quarter for them. So they have ongoing relationships there that we forecast them in our revenue. But other than that, it's pretty much the same. They're very similar in terms of percentage of visibility.
Thank you.
Thank you, Greg.
Thank you. Our next question comes from Peter Arment with Baird. You may proceed.
Yeah, good afternoon, Wahid, Kevin, Denise.
Hey, Peter.
Wahid,
Hi, Peter.
Hey, guys. On the just kind of focusing on the guidance, I guess, in the individual segments. When you look at autonomous, the year-over-year kind of growth ranges is quite wide from the kind of the pro forma number that you provided, the 14% on the lower end and 33% on the higher end. Wahid, what is it just assumptions around what potential LMS volumes can be at Switchblade or maybe first orders for P550? What are some of the kind of key drivers that, affect the lower end of the range and the higher end of the range?
Really, Peter, it has to do primarily with the U.S. DoD contracting and timing of these contracts and awards. That drives a lot of that range, the spread of the range. So we are ready. We have the capacity as a company. We've been, one of the key differentiators that we have is our ability to turn around and convert backlog or orders into revenue. That is one of our key competitive differentiators, and also have the ability to scale quickly and produce at mass and volumes. But however, what we can't really predict effectively, which is really difficult in the entire industry, is how does the U.S. DoD funding and budgets, the congressional approvals, and all of that works out, it plays out, and eventually makes it into a contract to us. So those are the primary reasons for the range of outcomes and the spread of that range within essentially both segments, but more acutely into our autonomous system segment. Overall, we feel very strong because if the timing of congressional approval of the budgets and the signing of the president's budgets and the DoD converting it into contracts happens in a timely manner, we could have a significantly strong year, but it is too early to predict that, and we're just getting started. What we really want to work on is long-term, consistent, double-digit, profitable growth, which is, a great position to be for us, given the backlog and the opportunity that we've developed.
Yeah, that's helpful color. And then just you mentioned the budgets. Just have you had a chance to evaluate kind of some of the key Blue Halo, portfolio programs, how they've stood up under the budgets? I know the Directed Energy Solutions and the SCAR program certainly have gotten a lot of attention recently.
Absolutely. So, we've purpose-built our company from the ground up to be ready for this moment, I call it. This is our moment. We have an incredible opportunity in front of us. We represent more than two-thirds of the Secretary of Defense's priorities. If you look at any documents from Congress, from the National Defense Strategy, from the administration, or from the Pentagon, you will see, from almost all the services and the COCOMs, you will see that the categories that we play in and we lead and we have the ability to deliver and scale are categories that is important to national security. And what are those? Drones, counter drones, direct energy, laser communications, space communications, electronic warfare. All of these are things and one-way attack. These are the categories that we, in many cases, invented or we're the leader in. And so we're positioned very, very well in those categories. And I think that we have many years of very strong potential performance and value creation opportunity here in front of us.
Appreciate that, Wahid. I'll jump back into the queue.
You're welcome, Peter.
Thank you. Our next question comes from Ken Herbert with RBC Capital Markets. You may proceed.
Hi, Wahid, Kevin, and Denise. This is actually Steve Strackhouse on for Ken Herbert. Congrats on the closing of Blue Halo, but I was hoping you guys could dive a little further into the FY26 outlook. How much of the revenue is stemming from the organic legacy AVAV versus Blue Halo, if you can give some color there?
Well, I think we tried to provide the pro formas in the guidance. So you can see on that, I think it's slide 10, we show the pie chart with the different revenue levels for the different product groupings. Those are the pro forma FY25 revenues for each of those groupings. So all the growth that we're forecasting is off of those pro forma revenues. And so you're looking at over 20% growth to the midpoint of the autonomous systems group and over double digit for the space, cyber, and directed energy group.
Okay, that's helpful. And then maybe just as a follow-up, can you maybe discuss the profitability across the two segments? You guys have previously or you're used to give like either an adjusted operating income or gross profit across the two. Should they be about the same, or is there a different way to kind of think about each of them?
Well, I think we're not really giving guidance on the breakout of the, say, adjusted EBITDA. That will be reported on a quarterly basis for each of the segments. But I would say, as I said in my remarks, the AXS segment is very similar to the existing AV business in terms of its profitability profile. So, that's one half I'm giving you. So.
Fair enough. And then maybe if I could just ask one more, just in terms of the free cash outlook for the year. I don't think I saw that as part of the guide. Should we assume that it's maybe similar to FY25? I can appreciate that there's a lot of moving pieces here.
Well, we definitely have some opportunities on the working capital front, as I outlined in the script, and we're very hopeful that we actually generate some cash from working capital this year. We do have a fair amount of capital expenditures expected for the year, but we're looking for a positive cash conversion this year versus last year.
And that's all because of the fact that we're growing and we're making sure that we invest in the areas that allows us to continue to grow and capitalize on these very large opportunities in the future. We are deliberately investing, and as you could see from our track record, the areas that we invested, whether it's R&D or capital, have actually panned out and delivered incredible good value and created value for our company. So I think we want to continue to do that because we're in a very, very good position to capitalize on these opportunities.
Sounds good. I'll hop back in with you. Thanks, guys.
Thank you.
Thank you. Our next question comes from Andre Madrid with BTIG. You may proceed.
Hey, Wahid, Kevin, Denise, how are you guys? Thanks for taking my question.
Hello there.
We're seeing now it's looking like NATO might move to 5% GDP spending pledge. Given how much of a sizable portion of sales international is becoming specifically amongst NATO customers, what's your initial assessment on what the impact of this 5% pledge could be if it does get moved through?
Andre, that's an excellent point and question. We believe that, as we mentioned in my remarks and in Kevin's remarks, we already do quite a lot of business internationally, and we continue to see more and more demand for our systems, primarily in Europe, but beyond Europe, even in Asia Pacific as well. The world, unfortunately, is not a safer place than we all wish. There's lots of challenges. There's lots of conflicts. The recent wars and attacks you've seen is basically put an exclamation mark on what you can do with the type of capabilities that we're the leader in. And all of that equates into a very, very large seismic shift in demand and opportunity for us internationally. It's going to take some time. We're going to continue to invest in being more present in Europe. As you know, we already have a subsidiary in Germany. We have a legal entity as well and other parts of Europe, but we want to continue to expand there to capitalize on this. The reason why we feel more even bullish on this is because we're uniquely positioned to be able to deliver. Most of these countries want to spend these dollars quickly because they lack these capabilities today in mass and volume. Our systems are battle-proven and tested. They work. They have seen its effectiveness, and they trust our company in delivering these systems for decades. And so I think we're incredibly positioned well to be able to capitalize on this opportunity because we can deliver at scale, and we are trusted and our solutions do work. So I think that's going to be a trend you're going to continue to see on essentially all of our products, not just on our loitering munitions, but our non-lethal drones, on our counter-UAS solution set, on our directed energy solutions. Even our space communication technologies has incredible opportunities ahead of it in the space domain globally and internationally, especially with European countries.
Got it. Super helpful. Moving, I guess, to Red Dragon, Wahid, I know we've spoken on this one, but could you maybe just break down a little bit more about what that TAM looks like? I know with Switchblade, you guys have approval to sell to 50 allied nations, but if I remember our conversation, it seems like those same restrictions are not imposed on Red Dragon given the ITAR regulations at play. I mean, maybe just provide some more detail if possible.
Sure. So as you all know, we introduced Red Dragon just a couple of months ago. We do believe that it's a category that we're the lead player that is growing incredibly fast. As part of these one-way attack drones, and an autonomous and autonomy-capable solution set in a degraded GPS environment or degraded communication environment is going to be very key. We believe the market for that is well over $1 billion. The data is quite difficult to get, but I can tell you that this market, the one-way attack drone category, should be equal, if not bigger, than even the loitering munitions as a whole. So we believe that this product is going to continue to expand, and you're correct. The foundational level of the Red Dragon solution set is a commercially developed product on our own IRAD that we do not have ITAR restrictions. Obviously, if we were to put specific payloads or communication devices in it, would become subject to that. But internationally, we can export the base unit quite easily. And it is designed to be modular, so where the payload and the warhead could be actually even integrated outside U.S. with a domestic supplier internationally. And we feel very good about it. It's going to take some time, but we believe that product is going to be a significant driver of growth for us in the long run.
Got it. Wahid, that's super helpful. I'll leave it there to two. Thanks so much.
Thank you, Andre.
Thank you. Our next question comes from Pete Skibitsky with Alembic Global. You may proceed.
Hey, good afternoon, guys.
Hello.
I guess just to go down the CapEx route on the 6 to 8% guidance on the cloud build out. Is that a one year type of a thing? Should we expect CapEx to go back to the kind of that 2 to 3% range in the future after this cloud build out?
That note meant that it includes cloud capitalization. It's not all cloud build out. It's really the normal range of facilities, equipment for manufacturing, and to a certain extent software systems and things like that. So that includes all of that. We expect it to probably trend down over time, but at the same time, we have tremendous opportunities in front of us, so I'm not going to make any predictions at this point in time.
Yeah. So Pete, just to echo what Kevin said, we have several very serious large growth potential opportunities in front of us. Let me just name a couple of them. In the space communications, the Space Force is really behind and upgrading the entire satellite command and control and communication network that the U.S. relies on. We have won that program of record. It's worth about a $1.7 billion program funded through the congressional budget documents. We can scale that and expedite deliveries in the fiscal year 26 and beyond. That's one. Loitering munition is another one. We're building another factory to increase capacity up to $1 billion in production. Red Dragon is another category that we believe that we're going to have significant upside coming in the next few years. And then just to name a few other ones in the directed energy space, counter UAS. We are the leading player globally, and we know that we have significant needs in our country and around the world protecting, critical infrastructure, refineries, airports, nuclear power plants, or military bases, embassies, you name it. There is an enormous opportunity for us, and we have the leading solution that is deployed